Good evening, everyone. Welcome to Hit the Bids closing comments here on March 3rd. Let's take a look at some charts, starting off with their indexes. Today was a volatile day across the board for equity markets. Lots of individual names losing ground and the indexes continue to slip. The Nasdaq making new lows and closing at new lows is not a good look for the tech sector. Expect the Nasdaq to begin its next leg lower. The S&P is still struggling to find support here, but we could also be seeing continued downside with offers below 58.48. Seeing a nice 180 point range day, lots of volatility here. Could see big swings both directions, but price is going to start getting slippery. The Dow completely engulfed last week's action, opening higher, but with the late break taking out last week's lows. All of these are not great signs, distribution days across the board. Expecting this break to take the S&P down to 57.21, which is our kind of a key level here dating back to last summer's high, as well as our pre-election lows here. That's going to be a key level that price will start sniffing out on the S&P. The Nasdaq is going to go look for 20,000, good psychological level, round number at 20,000. Plus prior highs as well as election week lows. Key level for those, expect the bears to push down to those levels, or at least have their target set for there. The Dow would be 42,000 is the same level there. So bears expect them to start pushing down to some of those key levels. Not a good look across the board for our indexes and the equity markets in general. Now would be a good time to continue raising cash and stay defensive. Crude oil markets saw a nice down day for the bears out there. Continued grind lower below our 69.75 bear pivot. See price found a low near 68 today. Expect prices to keep dipping down into the 67, 68 area. Lots of leftover demand that price will be checking out. The 67 to 66 level, it's a pretty loose, blurry zone here, but our big picture charts are showing us that we have a key level dating back multiple years supporting price, and we're continuing to put pressure on it. At the moment, we want to see how price acts down at that 67 level, but if we start to see offers below that and down below as far as 64, we could see the selling increase in this market as well. But that's a big picture look, and could take time for that to play out as we're seeing a pretty low volatility and choppy market here, but expect the bears to keep grinding lower. Next up, we have live cattle. Today in the April contract, we saw the opening range break down below our $92.50 mark early in the day. Nice $2 to $2.50 flush early. Finding supply down or demand down here at $1.90, dating back to that breakout that pushed us up to new all-time highs over that 4 to 5 week period from Christmas to the end of January. Price was able to close back above $1.92, but we need to see today's high get taken out and close back above $1.93 before we let go of our bearish bias here at the moment. Price is pretty heavy down here below these lows, and expect more volatility to come from here. We do see the summer months broke their prior week's lows as well. This is not necessarily a great look as we're seeing price gain speed and below our 50-day averages. We do see the October and December contract trying to find support in these prior 2 to 3 week ranges. Around $1.90 on each one of these contracts with some wiggle room, of course. If we see these prior lows around $1.90 to $1.8927 on December and this low near $1.88 on October, if we see those lows start to give up, we could see the selling really start to accelerate in the live cattle futures here. Next up, we have feeders. Today we also saw a quick break below our bear pivot for the week, caused some selling early in the day. We did see price find support near 270 in this 20-day average. The bulls are fighting back here in the feeders with support at the 20 across the board. This is constructive, however, the whole general market seeing a sell-off here. There's kind of cracks forming all over the place, so just be cautious here across the board. But the feeders are definitely where the strength is compared to these front month fats. So last but not least, we have corn, which saw another 13-cent decline today, taking the elevator down. This is a pretty ugly look. No need to be jumping in front of this thing. We're going to see continued volatility here in this market as well. The bears don't seem to show any sign of slowing down at the moment, so we could be seeing prices down to 450 to 440 over the next few days. But no real reason to get involved here on this market. Let this one find some support and settle down before we get involved in this corn market. So lots of volatility across the board. Pretty ugly closes today in a couple markets. Be careful out there and stay defensive during a time like this. So thanks everyone. Have a good night.